This is our weekend commentary for the ICT mentorship, May 27th, 2022. All right, so we are looking at the daily chart of the dollar index. Had a little bit of a movement lower today, but it's Friday. There's a lot of folks with money just simply sitting on the sidelines. They're not trying to do anything. They have a long 3-day weekend coming in. So have that in mind. Monday, there will not be a recording on Monday. I'll be celebrating the holiday with my family and friends, so I will be unavailable for video production. I will touch base with you on Tuesday, so that way we know what we're doing here schedule-wise. And for one of the user groups, I made a mistake last night. I thought I had posted the video for their respective groups, and I didn't. What happened was I posted it and I made an error in posting initially, and when I deleted it, I thought I came back to it and posted it again, and it didn't make it to the forum. So when I changed and transitioned to another user group to post the link for that following user group, I didn't bother to check it. It was my mistake, so I apologize. You got that video late this afternoon or early this morning. There was only one user group affected by it, so that's still not good, but I apologize. It was my fault because I'm doing too many things all at one time. So anyway, not really calling anything here. We're just kind of like reviewing, like settling down for the week. But we moved below the relative equal lows here after moving away from this SIBI. Do we trade back up into this area here a little bit deeper? If it does, it would need to come back immediately and reject. Otherwise, we'll be looking for it to go back above, find some support here, and then resume the uptrend. But as long as we remain below the SIBI premium high, we're bearish. All right, hourly chart on the dollar index, you can see why, not to beat a dead horse, but, there's still a lot of people, even if you look at the comment section on my YouTube channel, a lot of people that know me for Forex you can see it. They're frustrated because they're like, why won't he talk about Forex? Why won't he talk about Forex? And I've already mentioned it, but they're just simply not listening. This is why I'm not interested in this type of movement when you have very clear low resistance liquidity runs occurring in the index futures. So, when it dies down, it will. This will speed up again and get a little bit more cleaner in terms of the price delivery. But right now, my attention, as it should be for you, is on stock index futures. So just sideways market action, not really doing too much. Dollar index 15-minute time frame. Again, we had a little bit of a run here on the 10 o'clock news that came out this morning. Relative equal highs. It looks like we could try to pop up in here. Take out that short-term high. Euro dollar. Okay, so far it worked off of that discount low. Rallied up, had a little bit more movement, cleared this area in here, went into this fair value gap a little bit deeper here, and then surprisingly, it's pulled back into the range. So again, just not a lot of activity because of the economic calendar. All right, so you can see again that return back into discount low, discount relative to the premium and discount imbalance levels. No Fibonacci required. It rallies up. Buy side imbalance, sell side inefficiency. Order block hits it, rallies up, takes out buy side liquidity here. That right there is a trade. That's it. It's done. So a run from here, or here, or here. That is all you would be expected to get from euro, and then it's pulling back down into the range, back to the premium high of the imbalance, and then this consolidating. 15-minute time frame on euro dollar. Again, after running out that previous high I mentioned on the hourly chart, we broke down. Check this out here. Fair value gap, broke a swing low. This range in here, it is essentially at a equilibrium level. Getting filled if you're trying to short that. Your stop never would have got tagged here if you were above the swing high. and the market trades lower, a little bit more energetic here, takes out that swing low, fair value gap, returns back up in, same process, the high of the candle here or the swing high, whichever one your risk model permits. Then it runs lower, back to just about touching. I thought it touched it on the hourly chart, but now I'm looking at it on the 15. Didn't quite get down to it, but below an old low here. It's offset distribution. Not a bad little move there. So both sides of the marketplace, here, here, here. I don't like that. And above the old high for selling off your longs. If you were doing anything back here, you can back test that if you didn't do it. And use this as a back testing case study in this one here, trading down into sell side below that low. Admittedly, as it was dropping down, I would have expected it to at least touch this level, but I would have been incorrect in that regard. And just really nothing that makes any sense here for me. Pound dollar, we were able to get up inside this SIBI a little bit more, take out the short-term high, so that has been delivered. Okay, so we had that run up, almost came to the premium high of that smaller refined imbalance, and go back and look at your previous recordings and you'll see what these levels are. And just nothing in here really stands out for me. Like I would not be touching any of this. In the 15-minute time frame, same thing. I just don't see anything here that is that exciting or interesting to me. I mean, the only consolation is that it pulled up into an area we were looking for it to do, but to trade it or be a part of it, I'm not interested. So if we were looking at the low, let's say you had the best case scenario, you got in at the low on the 26th. That is essentially 100 pips from here to here. Okay. There's hundreds of points or handles happening in the index futures right now. So there's no comparison. So I know it sounds like I'm falling out of love with Forex, or maybe some of you are concerned, oh no, they changed the algorithm. Something's broke now. That's not what this is, folks. It's just a prolonged period of unfavorable price action. And if you didn't know any better, you'd be in here blowing your account. So I'm guiding you to where you should be focusing your attention. Whether you trade index futures or not, following along, it helps you keep your skill set refined and honed. So that way you're not, when Forex becomes favorable again, it'll be an easy transition right back into what you would expect to see in price. That's all it is, folks. It's not something to be concerned or alarmed about. They haven't broken anything. They haven't changed anything. Okay. It's just right now, because of everything that's going on in the world, which is about to get really bad. I'm not going to say anything more than that. You've heard me preach it. I'm not going to say it again. Everything I said in the past still holds true, but more so now. That's the reason why we're having these stagnant price action in Forex. Okay. Only the crosses are doing a lot right now. And you know the reason why, because dollars being manipulated, held in consolidation. So you look at your crosses, which one has the higher differential, pair it up with the lower differential, and then look at market structure. And then you'll have trades. But I don't personally trade those crosses. That's up for you to study. Okay, so if you're really pushing hard for Forex, that's where you should be putting your nose into the chart. All right, so we are in the E-mini S&P June delivery contract for 2022 daily chart. All right, we got our delivery to the volume imbalance, cleared out the short-term high for buy-side liquidity. Just a really nice delivery. I mean, look at that. I mean, that's nice. I mean, that's really, really nice. And when you have these types of moves, especially if you're a new student of following this particular asset class, it's very easy to want to say, I'm only going to do this. And it was a long time before I said, I'm going to leave this for Forex. But Forex was moving around a lot. Like, there'd be 300-400 point or pip rather days as the average for many of the major crosses back when I transitioned. So it was a different kind of Forex market. I mean, things were wild back then. But these markets here, they will always be a avenue for consistency in terms of a very professionally operated market. Bonds, the same way. You just can't compare with the consistency and continuity with the way these markets book. But when they're slow, it's worse than Forex. It's really bad. I'm interested basically to see what we're going to be doing in August. We have midterm elections in November of this year. So that might make things a little bit more wild. Otherwise, typically August is a month where I like to not be doing any trading. And so you guys know, because we're wrapping up the bulk of the production of videos and we're going to the forum, I'll be taking a couple weeks off from doing anything at all, whether it be in here or on YouTube in the month of August, because I'm turning 50 and my wife wants to do something and I don't know exactly where we're going to be or what we're going to be doing, but I won't be doing this at least for 2 weeks out of August. So that way you can schedule and then anticipate, doing your own thing. Okay. And you should treat that month as a vacation month. Typically, it's also a sloppy, slow, doldrum type of month was really what I was getting at. But it may be a little different this year because of all the things that's going on. Wars, engineered famine, economy acting stupid, gas prices so high. It's a mess. So we might get a lot of volatility this summer. And if it does, great. If it doesn't, you've expected it and it shouldn't be any skin off your back. But it rolled up into our volume imbalance, which I have not talked about. And I know some of you are in the comment section. And I know you want me to give you a little heart to your comment that you saw the volume imbalance and you're waiting for the volume imbalance to fill in. I'm not hearting your comment. Have you noticed that? I don't want those things talked about, folks. It's bad enough I leaked a little area in the chart, which I want to talk about in this market here when we get in lower time frames. But I think it went over people's heads largely. But you'll see what I'm going to show you in a couple minutes. But keep the conversations germane to what I'm teaching just on YouTube. Don't try to ring in other things because I'm not going to entertain that comment or that question. All right, so here's the hourly chart. You can see we moved up rather nicely. Fair value gap starts rolling. Consolidation rolls up. Imbalance, we talked about that from yesterday's trading on YouTube. And then the fair value gap here. That's what that green shaded area is. And this is where I messed up. I didn't want to have this actually in the chart, but I'll explain to you when we drop down to 15-minute time frame. And then we rolled up into that volume imbalance on the daily chart. That's what that big blue shaded area is. And the 4095 level, that's the old daily high that we were aiming for on YouTube. And you knew that here too. Order block here at the opening, then rallied up. And because I'm not teaching the volume imbalance, I wanted to give them a low-hanging fruit objective. And none of you should be upset about that. That old daily high on the daily chart, there's nothing wrong with that. It's actually a really good objective. They would not be taken to the expectation of reaching for this premium high of that volume imbalance. And in fact, it's gone even higher. So I'm surprised with the strength it's had today. But you know that you would have been looking for this, if not the middle or consequent encouragement of that volume imbalance. Okay, so let's go into the lower time frame 15-minute chart. All right, so here is the business. Okay, the market is rallied up, it consolidated, left buy side liquidity here, relative equal highs. What's the market? It's bullish. You knew the volume imbalance is the draw on liquidity, and 4095 buy side liquidity. Okay. So we ran up, we're consolidating. We have relative equal lows here, and it broke. See that? It took that low out here and left what? And what did it leave? A city, sell side imbalance, buy side inefficiency, right? No. No. See, everyone's going to see that and think, okay, this is where resistance, the market structure has broken down, and we're going up into this area here to go short? No. No, 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 no. This is where narrative trumps market structure. This is what everybody is not going to be able to do that has not been properly trained by me. Okay. I'm using this pattern here. So when I wrote this algorithm, I'm looking for opportunities for it to present like a red herring. It's going to make it look like something's in the chart when it's not. And only those individuals that are going to understand what price is doing are going to be able to participate in. So this pattern, which is what would be understood if you were bearish, has a really nice, easy shorting opportunity. Going back into a fair value gap, short it and run down into this fair value gap, or maybe reach into order blocks. If you were bearish, that would be expected. The algorithm would likely reprice on that basis. But what is the bias? It's bullish to this price level and up into here, relative to that volume imbalance and the old daily high. So back to this pattern. This right here, I'm entering on this candle when we're inside or just above the low. The low, this candle here, is 4048. That's the high of this candle. My fill on this is 4049. So I'm inside of this area here. But I'm not using it as a short. I'm buying it. Because, watch, this is the logic behind it. The algorithm is going to seek the liquidity here. It's taking those individuals out and returning back to the hourly fair value gap. So it's got, what, 2 discount arrays inside of a bullish bias. Sell side's taken, imbalance rebalanced. So we have 2 things on a discount. There's no reason for me to be afraid of placing my stop right at that low. There's no reason for me to be afraid of that, because we've already had taken out the sell side. We've already went down and rebalanced the hourly fair value gap, went down even lower than that, then ran up into an imbalance, and I gave it some time. It didn't break away, so in this candle, I bought it. Stop under here. The market just trades sideways, drops down. I came 3 3/4 of a handle of heat. That's all this trade took. And I was buying it ahead of midnight and went to bed. Didn't care, didn't worry about it. The logic is we've already took the stops out. We've already rebalanced. So it's done both things that I teach you that price does. It goes for the liquidity, or it goes to an imbalance to rebalance. It's done both, folks. The stop hunt's already happened here. So if you recall back in my teachings, I tell you sometimes I get up and look at the charts just ahead of midnight, and I'm looking for some type of event. This is one of them. So I'm going long in this candle here, where anybody else that would be watching just simply my YouTube videos or leaked commentaries from the mentorship, okay, they're going to fall victim to this. And that's why this algorithm was written this way, because you have to know what you're looking for. You got to know what it's drawing to. So what is it up here? That's a initial draw on liquidity. So I'm long here. I woke up and recorded myself taking the first partial here, right above the buy side liquidity. There's the entry candle. Stop was right underneath there. Just meandered its way up and boom, ran above, took the buy side. Then we wait for what? We wait for the volatility and that Judas type of a price swing at the opening. So we have 8:30 news embargo lifting. What's happening here? Ahead of 8:30, the market drops down, takes out the sell side liquidity. And I apologize because you'll probably hear me say this part again too in the YouTube section when we talk about it. Then the market rallies up, displacement, and then it held in here. And as I mentioned in the commentary on the little vignette video I posted on my Twitter, you don't really have to have a Twitter account. Like, you can look at my tweets on Twitter. If you just put in, I think, www.twitter.com/I_am_the_ICT. And then you can pull up my tweets or tweet replies, I think. My tweets aren't protected, so you can watch them there, and you'll see the little vignettes. But anyway, I mentioned that once up in here, I said it was going to stagnate and not move around too much. And I didn't expect it to retrace back down in here. So we had a institutional order flow entry drill here, which I almost started to annotate in the chart, but I just basically said, okay, it's going to consolidate. I don't think it's going to retrace, like to go back down into here, and it drops down just a little bit and then rallies up, goes through the objective. And I had to hurry up and turn the video off because I wanted to talk more about all this, and I was like, it's beyond the scope of what I was wanting to present in YouTube format. So I tweeted also when we went back above this high here to pretend that you took a partial here. That's where I did that. So it was first partial, 3 of the contracts of the 5 I went long on. So 3 came off here. I had 2 remaining. 1 came off here, and then the final one filled on the hit of that 4095 level. So even though the error is way up here, it's just filled right at the 4095. Okay, and that's the business here. That's what it looks like from the morning, and where I entered on this failure to launch type format on what would otherwise be viewed for a neophyte, seeing that, thinking, oh wow, this is going to be on those sales ICT talks about, and whoop, no. So it's important to understand where it's drawing to, what's the narrative, why is it likely to happen, and we've already seen stop hunt and rebalance. So this swing low, it's in. It's done. So you don't have to worry about it going back down there. So entering here against what would otherwise be expected to be, they should sell off because we've went back up into this liquidity void. Wrong. That's not what that is. This is proof that what you're learning, just because people have, by different manners of procurement, got leaked content, it doesn't matter. It doesn't matter because they're not going to be able to make it work because they're not being properly trained. Oh, but you're doing it right now, ICT. No, I'm telling you what it is required, and most folks aren't going to put the work in. That's why I'm confident. Most of the people that will learn these concepts by leaked content are never going to be consistent. They're never going to be consistent. They might have hit and miss wins, but because they're not being every single week groomed like this before it happens. See, you're seeing it live. Those leaked videos and stuff, they're months behind. Somebody gets kicked out, somebody's been caught leaking or selling, or just stopped making payments because they couldn't afford it, and then found a way, well, I'll just start selling what I got because I got to make my grocery bill. I got to make my ends meet. I understand what they're doing. I get it. Okay. But everyone that gets it that way, I hate to say it like this, but they're cursed. It's just the way it is. I have people literally email me and I apologizing because they've watched the content and they see how generous I am being on YouTube. And they're saying, I got to one of those videos where you literally say, if you got this as a pirated copy, have you realized you ain't been able to make it work yet for you because you're cursed? And they're asking for my forgiveness. So I understand there's a lot of people out there that could not afford to be where you are. And that's why I'm doing what I'm doing on YouTube. And I'm using that energy. Like I came to you today on an upbeat, really feeling good about being a teacher and a mentor. And I'm using that energy that I'm tapping into from that community and bringing it here. And that's why I'm doing it, because I know those people are chomping at the bit to buy whoever is in here trying to sell. And I'm making it so easy that there's no reason for anybody to want to spend money on your leaked content. And I told you I was going to remove your market. I'm making a new market. It's the YouTube content for free. You all get a special seat at my table here. You get to see it beforehand, why it should happen, the whole business. They're getting a one-trick pony approach over there, which is really good. But in my hopes, in the next YouTube video, I'll talk about this too. My daughter's just not into it. Like she can't get it. And I'm frustrated because I thought I had this down to a simplistic approach and she can't. And I'm really, really, really frustrated. So I don't know if it's her being too stubborn and she's expecting it like a millennial. Oh, it should be easy. Just give me the 5 minutes. I mean, she doesn't do that obviously, but she just can't see it, and I don't know how else to simplify it. I don't know. So I'm failing in that regard as a teacher to her. Like I don't know how to make it any easier. So we'll probably have about 3 more weeks of the teachings on YouTube, and then I guess if anything, I'll just do like here's an example of using the model. If I put a video up, it'll be just that. But I'll talk about money management. I'll talk about a routine, and I'll give you that also amplified as model number 13 in here. All right, so I'll tweak it a little bit more, turn up the dials a little bit for this community, but what they're getting out there is enough. I mean, you can see people, showing their charts and their entries, and who cares if it's demo? Some of them are live. I mean, some people are actually sending me, like, they're really trading with real money, and I'm like, what are you doing? What are you doing? I told you don't send me this stuff. I'm not going to high five you for that because you're all still learning. But they're in, they're awestruck because they're seeing it now, and that's what I mean. Like, that's why I do it. That moment of astonishment when you get it. It should be entertaining for you to watch these new students that have never, endeavored into things like this, seeing it happen in their chart, and they're pushing a button and they're engaging it, and their excitement because they see it, they did it on their own. All I've done with them is literally just what I do with you on a small intraday basis, pointing to a specific level. If they know what they're looking at and they've been studying, they'll be able to know what it is they're looking for. And those that are putting in the work in, you see it there. They're excited. And that is what I want from all of you here. But I don't get it. And it's frustrating to me. Like, you have the best here. Like, you have every aspect of the mentorship in front of you. And I know some of it's been information overload. Like, you're just like, I don't know what the hell I'm going to do now. I got so many things here. What am I going to use? So I guess it's like a painter. Like, when I watch these people paint, they have all these different paintbrushes. And I'm like, why can't you just paint one brush? Like, give me just one paintbrush. Give me a paintbrush. I don't need it to be a fan. I don't need it to be this, a round tip. Just give me one paintbrush and then teach me how to paint. And then I'll, work with this. And it's kind of like, I guess, the same way. You have so many tools now. You can be entertained with me, demonstrating them. But at some point, you get stuck in that pattern of just being entertained by what I do. And you live vicariously through what I'm able to do, forgetting the fact that you started this for you to do it. And then time goes on, and the amount of time from when you first start to you not really doing anything at all, except for just watching videos and repeating what I say and calling that note-taking. No, that's not note-taking. Hearing me speak about something, how does it resonate with you? Does it create a point of concern about something else that may arise that I don't understand why he said that? You write that down and you go into your studies of why this was a concern for you. Just writing down dictation of what I'm saying is not enough. That's not note-taking, folks. That's not putting in the work. It means going into the chart, looking for these things I'm teaching every single day. Every single day, whether you feel like doing it or not, you just do it. You show up like your job. You don't want to go there, but you have to go there to make your ends meet. To make the ends meet here, what ends is that? Well, when you started, you wanted to be able to do this on your own by a specific time. Well, those ends have to meet. You are in that driver's seat. You make that happen. I've already given you enough to find profitability and consistency. But it's hard when you have all these things like a candy store, going in there with an empty stomach like a kid. You're going to grab everything and come away with a bellyache. And that's what a lot of people in here have done over the years, and they get frustrated. But that's not my fault, okay? That's not my fault. I've taught and told you, when you go through these lessons, which one of these PD arrays, and you go back and listen to this again. If you just went through the mentorship one time, you didn't do it. That's not doing the mentorship, okay? You just listened. You just watched, okay? Go back and listen to these old recordings and you'll hear me say, pick one PV array and make that the basis for your model. All I have done is taken one PV array that's visually easy to spot. You can't hide it in the chart. It's not ambiguous. And taught it on YouTube with a directional bias around time of day, an entry technique, where to place your stop, where to take partials at, and there it is, done. That's a complete model, and with algorithmic theory that's already been given on YouTube. And look what has happened already. People are already able to do it. They're getting funded with these funded challenges. They're pressing, whatever they're doing, to do these things, and they're getting paid. Isn't that what you did this for? Learn how to read price? Well, look at that community out there. That community rivals this one. What do you think has more energy? See, you only see your user group. I see all of them. That community is thriving. It's alive. It's pulsating. Okay? Because they're starved. They're hungry. You have been eating good. Okay? I've been giving you too many sweets here. And you've grown complacent with it. Well, give me the next magic trick. Over there, everything I throw down on the table, they're like ravenous wolves, and they're gone. It's it. And they go right to town with it, and you start going into the charts. They're ferocious over there. And I love that. I love it. I love that energy. Here, it's almost like snobbery. Oh, but I don't want to be a savage. That's uncivilized. No. When it becomes, exciting about learning and digging into the charts, finding what it is you're looking for, that should be exciting for you. And if it hasn't been, you need to find a way to get yourself stimulated. So you are. Watch these people over there on Twitter. I mean, they're savages. They absolutely devour the smallest little thing I give them, but they put it to work. And yeah, there's some people over there belly aching. Well, what about this? But you didn't say about this. And why are you doing this outside this? That's the same way it is in here. Each user group I have a dozen or so. Just they don't ever say anything positive. They're going to critique something with a negative light. And I think it's just the way they're built. They're wired that way. And some people are just never going to do this. They're never going to do it because they're never going to commit themselves to it. And they like to believe they have done the work. But I'm telling you, if you do the work, the byproduct is you figure this out. Period. That's just the way it is. But you quit before you get to the point where you understand what it is you're looking for. Or you're wasting time with something that isn't really resonating with you. For instance, if you're looking at price action, if you want to be a specific price action trader, an Artemis pattern, which I taught. Okay, that's just one pattern. I don't gravitate towards that pattern a lot, but some of you, because it was given a name, you're like, I want to see him trade the Artemis pattern. What about just trading a simple optimal trade entry? That's the beginning of everything I've ever done. You're not able to find profitability with that? Because in my mind, that's the easiest thing. And the fair value gap helps you unlock it. Because it gives you the order block, the optimal trade entry, retracement, and the fair value gap. You have 3 patterns in one. That was my trident pattern back in the 90s. That's what I dubbed it, the trident pattern. It was a fair value gap, better than 50% retracement, and an order block. That's what I sat down with one-on-one. That was the thing that I taught folks. Okay? And I'm not going to make any more of that because I'm going to talk about this in one of my books. But the whole idea is many of you waste time. And because you waste your time doing things longer on things that are not showing you fruits. Okay? It does not mean that that pattern that you're studying that doesn't show you positive return for your time invested If you spent like 2 months and you just can't get a good footing on it, change. Pick a different PD array. There's lots of them, folks. There's multiple PD arrays that you can gravitate to. I have a couple students in here that simply just want to use mitigation blocks. And that's one of the least ones in the repertoire, but that's their model. They know what they're looking for and they do very well with it. But they don't like any of the other PD arrays. It's like, we don't want to look at it. Okay. So they found what makes sense to them. And they use the logic and the bias and the framework, what I'm giving you in these commentaries. When I sit down with you each week and say, okay, I think it's going to go here, so I'm pointing for you, okay? That skill set of you getting better at reading it over time, once you discover what it is that you're doing and you're consistently able to find it, form in the framework and narrative and bias that I'm giving you in the commentaries, then you have to challenge yourself and start looking for these things before you watch my commentaries. Then, if you know what I'm saying before I say it, you have graduated. There's nothing else that I'm going to be able to teach you that won't be that much of a difference. In other words, I'm not going to elevate you any more than that. That's where you're all trying to get to. You want to try to get to that point where you know what I'm going to say, what I'm going to draw attention to in the chart before I say it. And if you're able to do that, then I have been successful with you and you have been successful in this mentorship. There's no graduation diplomas or anything like that. But that's the moment where you say, I got it. I understand what I'm doing now. And ICT helped me get to this state of understanding. And now I have to keep doing it to stay good at it. And if you do it for a couple of years, you'll never forget it. It's a skill set that'll be with you as long as you have your mental faculties. And the markets are traded. So, anyway, I feel like I wanted to talk to you a little bit about that and tell you why I am giving that whole community over there that doesn't pay me, doesn't do anything except for give me a thank you and share their enthusiasm. I tap into that. And it also makes people understand that there's no reason to be buying from the pirates in here. And you can get mad about me and go over there and troll me all you want. It's just going to make me laugh and smile more. Because I knew there was going to be people that wanted to join here with no intentions of learning. They just know I'm a hot commodity. So if they get their little grubby hands on something that I know and everybody else knows, I'm not going to do another mentorship. I'm not doing it. I know there's some of you in here think I'm going to. But I swear to Christ, I am not doing another paid mentorship. I am not doing it. Not doing it. I'm going to teach when I feel led to in the public. But in this community here, that's it. There's no more paid anything. And I got to be completely honest with you. I love the fact that there's only a couple trickling little people coming in that's just making their charter member payment to get back into the forum because they didn't make their charter member payment. That's it. That's all it's coming in. So I don't have to worry about PayPal. I ain't got to worry about payments. I ain't got to worry about did you make the right payment note. Like all that stuff's gone. Like I love it. Like I almost feel like my old self again. And I love it. Like I can't wait to get done with the video side of it. And when we're done that, I think that my personal life will be benefiting from that. And that will also fuel me for teaching. And I can teach a whole lot in a static chart because you understand the basics. You have the core content behind you. All I got to do is point to where I think it's going to go and outline what to expect in terms of what I say audibly here. And you can watch it through a chart. Read it in one quick glance and it's done. No waiting for the video, no worry about downloading anything. You would just take that information. Okay, this is what he's referring to. Let me dress my chart up and draw attention to that and we'll watch what happens. Done. Everybody's time is more economically spent because I'm 50 soon. And I feel good for almost 50. Like I'm not like decrepit or anything like that. But I feel my energy level is not what it used to be as a younger man. And I'm in the fall of my life. And my family has not seen much of me in the last 6 years. and I want to spend time with them. My kids have grown up a lot, and I want to spend a lot of time with them and do things with them as a family. And doing this mentorship and making videos and teaching has taken a lot of that time up. And I want to free that side of my life up and still do what I love doing. I'm passionate about it. And I'm still going to be teaching. I'm still going to be involved in the community here. But my level of output it must reduce considerably. Like it's got to drop 70% because I can't continue at this pace. Like I can't do it and have a happy wife and my children, able to see me. So anyway, I got that off my chest. I want you to have a very pleasant weekend. I will touch base with you on Tuesday morning. I'll have a bunch of links so you can start going to town, downloading things that I'm collecting and putting into place, and that way we'll finalize all that business with the videos. And I think, if I'm not mistaken, I've covered everything I wanted to talk about today on my little hit list here. And I will touch base with you, Lord willing, next Tuesday. Enjoy your weekend in the States. If you're in the armed service or was in the armed service, thank you for your service.